Hey guys, I'd like to dedicate this episode on the topic of stablecoins, and I'll explain what it is, why I think it plays an important role in the crypto industry at large, and how it would work side by side with Bitcoin as the leading store of value digital asset. So what are stablecoins? So stablecoins for me are like cryptocurrencies that have kind of a certain utility function. They are kind of backed up with whether it's a fiat currency, or whether it's backed by another crypto, or even a commodity, or even kind of an algorithmic type setting. So these are the four types of stablecoins backed. So these are like traditional currency that are backed under a particular fiat, whether it's a US dollar or a euro. So treat fiat-backed stablecoins as a digital dollar because these are mostly used throughout the stablecoin space. So you might have heard Tether. So that is certainly the leading type of fiat-backed stablecoin in existence at the moment. We have these other three types as well. So crypto-backed stablecoins, these are like where a stablecoin is backed by another crypto like DAI, and is backed by a mixture of crypto assets. And how it does it, really, it depends on the underlying crypto asset to have issued a novel collateralized amount, such that if there is a slight volatility or drop on those underlying crypto assets, it would compensate and maintain the stability, the overarching stability of the crypto-backed stablecoin. So DAI is really the leader type of crypto-backed stablecoin. Now moving on to commodity-backed stablecoins. So as it says here, these are usually tied to a value of physical assets such as gold or silver. So the example here is if you own PAXG gold, it's backed by gold reserves. So if you own PAXG, you essentially own a piece of gold that is held somewhere in a secure vault. So that is an example of a commodity-backed stablecoin, being gold as the main example or the most popular example of that. And then finally you have what we call here the algorithmic stablecoin. So what are these? So this is where they don't actually rely on a traditional crypto asset or fiat backing, right? So instead, what it does is it uses kind of an algorithmic approach to control their supply and demand in the free market. So there is one example of this, which is called Terra USD or UST for short. So these four types of stablecoins are in effect cryptocurrencies. Now, what are the use cases of stablecoins? So being a cryptocurrency, they usually are used for facilitating trade. So in the case of traders, they can use stablecoins quite quickly in order to move funds between different types of cryptocurrencies. So if you think of the journey of how it becomes a stablecoin, usually you have a wallet in a crypto exchange like Coinbase or Binance or Crypto.com, where you have in your wallet an amount of fiat currency, whether it's a US dollar amount or euro amount. So let's say you have $600 in your crypto wallet and you want to convert it into US Tether, which, as I said before, is the leading fiat-backed stablecoin. So I usually, within the app of the crypto exchange custodian, so let's say I want to convert $300 out of the $600 that I have in my fiat wallet into Tether. Well, I just simply make a swap for $300 worth of fiat USD currency money into Tether stablecoin. So as in effect, what you're doing there is you're starting to introduce the first step of the journey of converting physical asset into a crypto asset, which is Tether stablecoin in this example. And why is it important? Because we are seeing trends of stablecoins are like the gateway entry into purchasing other digital assets. For instance, Ethereum, Solana, and most importantly for me, I can convert and use my stablecoins into Bitcoin holding. This is the key point. This is why stablecoins is gaining a lot of momentum. So it's not just that, it uses stablecoins in effect as a cryptocurrency to convert it into a much stronger hard asset, which is Bitcoin. I can do that. But also in addition to that, I can use stablecoins for use cases as I've shown you here for the day-to-day commerce. So I use it as a medium of exchange. So this is what the use cases are in effect. So it can be used in a trading environment where you want to trade stablecoins to move funds in between different types of crypto assets or cryptocurrencies. So that's one use case. But the more popular retail use of stablecoins is for purchasing those goods and services in your day-to-day commerce and day-to-day lives, really. This is ultimately what stablecoins are mostly used for, rather than as a store of value. And then finally, if we move on to this final slide, this is where I try to kind of delineate the differences that we are seeing out there in the crypto industry space when we talk about stablecoins and Bitcoin. So stablecoins here I use it really as a medium of exchange. So being a cryptocurrency is perfect for that, where I can use it for my day-to-day commerce, right? So think of stablecoins as holding US Tether in a check account, in a current account. Now, Bitcoin, you can use Bitcoin as a medium of exchange like stablecoins, but you're going to be diluting the value and the mere essence and properties, unique properties that Bitcoin has. We are seeing more and more recognition and more of a need to find that hard asset, that magical hard asset, in order to store our wealth, to store our value through time and space, and particularly into the long term. So Bitcoin is really the only crypto asset that has this unique attribute of store of value, storing your wealth, as it says here, for the long term, capital preservation and growth into the long term. So what's the analogy for using Bitcoin as a store of value? Well, we all have some shape or form a private pension fund scheme. So you can treat a private pension fund scheme as an umbrella type of equity stocks and non-cash financial instruments in order to create effectively that capital growth in the long term. So when we retire, we can enjoy the gains at that point, right? Well, you should certainly consider including Bitcoin within that pension fund scheme or directly in your hard wallet under self-custody. So this is the difference. Stablecoins, think of it as Tether in a check account, in the bank account somewhere, whereas Bitcoin, you would naturally include that as yet another financial instrument in your private pension fund in the traditional finance sense. And this is where I would see stablecoins certainly working side by side as Bitcoin. I don't see Bitcoin as a competitor as stablecoins, as a cryptocurrency. I use it for different purposes. As I said here, stablecoins is that medium of exchange. And what you tend to see is there is growing adoption and utility of using stablecoins as a medium of exchange for that day-to-day commerce, whereas people are now valuing more and more Bitcoin as a store of value in order to preserve your capital, your assets that you have. But not only that, you want to certainly help to grow that capital into the long term. Bitcoin is the only digital asset that can support your capital growth into the long run, not certainly use it as a medium of exchange. We have stablecoins for that. So hopefully you found this episode interesting. So if you enjoyed today's episode, please don't forget to hit the like button and to share the video. And if you haven't done so already, please subscribe to my channel, because I regularly post interesting podcasts such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So I'll see you next time.